so much doom and gloom right now in the crypto space. If you're a macro investor, I want to present something to you. I'm actually going to do a few things. I want to present, first off, some encouragement to you. This is not to influence you. I'm not trying to say go buy, go hold. I'm not trying to make you overly bullish, but I want to present non-emotional data to you. While just like clockwork, so much of the comments on socials, they are so just in an extreme bearish position. But I want to present something to you. And then I want to explain, you know what? What if they're right? I want to explain if they're right and we're about to enter some crazy bear move, how long could this potentially last for? And then lastly, I want to explain my exact approach, what I'm doing right now, even actionable things that I'm looking for to really actually make moves with where we are right now in this part of the cycle. And I want to just start by explaining something to you. I remember, and I don't know if you were here or not, June 2019. I remember being on vacation with my wife. We were in LBI, New Jersey. I remember doing videos here. Everybody was so bullish, but I was so bullish. And I was just like, man, are we entering the bull market? And if you know, we had just gone through an insane bear market. And if you know anything about my YouTube channel, I started at the top of the 2018 bull market. So you have people that are like, I bought the top of a bull market and I held through a bear market. Well, I started my YouTube channel at the top of a bull market and I did almost every day videos through the bear market. So you could imagine doing a video here in the hotel room. I'm just hype, right? I just remember like, man, the thesis played off well. Like we are entering a bull market. You know what wasn't happening here? We weren't entering a bull market. We actually were about to get into a dip. Interestingly enough, shortly after I was, doing that video and we're getting bullish, quantitative tightening was announced to be coming to an end. Interestingly enough, we just had Fed announce the end of quantitative tightening coming in December 1st. But look, we still dipped, but I will tell you one thing, even at this swing high, not a good time to be a macro bear, a cycle macro bear. And so I want to really explain what's going on here because it is so simple. And it's more of an emotional thing than anything else. So hit the subscribe and like on the way in. If you're not in our intelligence system with our risk models, our exit planners, we have the free trial going on. Go check it out. Hit the link below and just get set up and start planning, strategizing. Crazy enough, we are closer to accumulation levels in pretty much all of our risk models back here. And so that's not to say go buy, but man, we are getting very close to insane prices and insane risk potential, in my opinion. Going back to this chart though, here's the thing. None of this is going how anybody thought it was going to go. And it never does go how anybody thinks it's going to go. And that's exactly the thing about crypto. It's what makes it so rewarding. There's never been a cycle where it's just been so easy. You know what? It's getting close. I'm gonna go all in crypto right now. The alarm is about to go off. We're about to get the parabolic move. 3, 2, 1, boom, like clockwork. It's never been so easy, even though it seems every cycle we want it to be that easy. Even back here, wanted it to be that easy. There's the bull market starting. It wasn't. Look at this, like a year. It was like a year before the actual bull market started. And I'm not sitting here saying it's gonna be a year from now until we get a bull market. But there have been many times, even since my time being here since 2017, I can remember how fast people go from, man, it's all over, to we are so back. And it's just like back and forth, right? Oh, it's so over, to we are so back. And what's so crazy about that is right now, we're actually in it's so over environment. And this is a altcoin market cap chart zoomed out on the weekly. So it's a very weird thing that we are at this, it's so over moment. And like, we're actually from bear market lows still in this higher high, higher low trajectory. We have quantitative tightening did just get announced that it's coming to an end. We have market structure, which is like so bullish for crypto. We have altcoin ETFs. We have all of these things that I nonstop talk about. It's not the purpose of the video. Everybody forgets those things. And so even the thought of this type of move, if we get a really big consolidation again for this cycle, to me, that is not a signal on the macro to not be a crypto bull. I have a long-term macro thesis for the crypto space. I think we are so early, and that's how I'm playing this thing right now. I think every single time, the most important thing, no matter what the crypto moment is presenting to us, is just to be positioned. That's for me. Obviously, be careful, hedge your risk, but be positioned. Be ready for the move. This has always been the most like consistent thing to remember, no matter how bad things seem, right? It's just the most consistent thing to remember. Be positioned. Be positioned here, right? Be positioned here. Be positioned here while managing risk. I always say it could all go to zero. The reason I say that isn't because I think it will. It's because I have to plan myself like it could happen. I got a comment. So everything I'm explaining to you, I posted on X. And I got a comment. Somebody said, Dan, how do you hedge risk in crypto if you're not a trader but a long-term investor? And it's such a good question. I realize I never even speak to this because it's such a big part of my journey. This is exactly how I do it. It's kind of the same way I hedge risk as an entrepreneur. Working for yourself, you don't get a guaranteed paycheck every week. That's the tough thing about working for yourself. It's not like every Friday I get paid by somebody. You got to hustle. You have to just kind of try and build your savings. And I said, it's a real important balance of getting exposure to the risk side that you're happy with while maintaining the longer term rainy day reserves. So it's like managing that longer term exposure, the longer term risk. That's a balance that is completely different for everybody, but that's how I'm approaching it. And I want to explain to you kind of I opened up the Cardano risk model here. It's all the risk models are showing such interesting data. I'm going to show you in a moment what kind of my thoughts are. I have to dig more into this. We're closer to accumulation levels than we are exit levels, which is funny because I've been doing so many videos about get ready, everybody, for positioning and having your exits. And I still feel the same way. We could go from a 28 risk on a Cardano risk model, right? Here's lower 30s into a bull market fast. So yeah, be ready for that. But I want to kind of dissect the opposite of that. But what I want to talk about first is really like, besides the actionable approach, what if things got so bad, right? And I was just looking at this. I thought this was interesting because much of the market right now is like, we are right here about to enter the bear market. And I've been saying, I don't think we are. And I still don't think we are. Okay. But what if we were? I just realized if we were like right here, and you can see this is us going into QT, the exact opposite is happening right now. The QT is about to end. Quantitative tightening is about to end. But check this out. From that moment, and you can just see we're consolidating between the 20 and the 50 moving averages. This is like what's happening right now, 20 and 50. It was 147 days. So right now, let's say we get a similar move. Let's just say, I don't think it's happening, everybody. I just don't. But it's 147 days. That's like, what? What is that? 4 to 5 months or something? I will be wrong, number one, about the fact that we're not entering this type of move, because I don't think we are, but I'll end up being wrong if we do, right? But the other thing is this. If I was wrong, my risk is managed. Okay, I'm wrong. I will say I don't think it's the end of crypto at all. In fact, that opportunity for the masses, I find it hard to believe that opportunity will actually even be introduced. That's one reason I don't think it's going to happen. But what an opportunity that will be on the macro if we got to move like that. And then lastly, okay, can I hunker down and grind through a 150-day move to the downside? And some might be like, well, Dan, there's no guarantee it would be 150 days. I mean, 2 cycles ago, it was almost 200 days, right? From this move between the 20 and 50 to the bottom. Some people might say, Dan, it'll be even worse than that. We're going to see a crash like we've never seen. Okay. Well, then now you're starting to border on the line of it could all go to zero. And even in that sense, I would absolutely not like that. But I'm trying to really manage my risk. Like, hey, it could happen, right? That is how I'm managing my risk while trying to maintain the proper exposure that I'm happy with if none of that even happens. We could go a little lower and then boom, we're bouncing. We could bounce right now. No matter how it plays out, I'm trying to prepare myself for upside scenarios too. It's not just about protecting from downside scenarios, but I thought it was interesting kind of that data point. Like if we are here and we just topped out and we're in between the 20 and 50, we want to get continuation, it doesn't happen, and we go down, find a bear market low. It took around 150 days from this moment last cycle. That's some interesting context. Now going over to the Cardano risk model, and you can go to any risk models, right? But Cardano is sitting at a 28. That's a sub 30. What I want to do, and I haven't really done it yet, is I want to really dissect when we get into the lows for Cardano, even through these cycles. And one thing I notice at a glance is the 10 to 20 risk score has been this macro bear market low consolidation risk score, a great time to accumulate Cardano. You can see here kind of towards the bottom of 2022 is at 8, right? Back here, 10 to 20. This area, 10 to 20 risk on Cardano, is a very strong area of accumulation. Now, we're going to be working on accumulation planner in the system. We don't have it yet. But what we have right now is exit planners. But even still, you can go through any of our risk models back here if you own certain coins, and you can do similar risk analysis with our risk models. And so this is one thing I'm going to be doing. Just in case we start actually just going lower, we keep falling, right? Cardano's below 20. This is at the precipice of altcoin ETF season, market structure, so much opportunity for these markets to unlock trillions of dollars of new capital. It's insane. And not to mention, even on the short term, things like the shutdown. I think shutdown is really making things lag. I think that could be potentially locking up a lot of liquidity as well. We could just see the shutdown end and boom, all of a sudden markets are like, they get some relief, they start bouncing. So I don't know if these risk models are going to continue falling, right, into these accumulation areas that I'm kind of spotting, but I'm keeping an eye on it. And so I wanted to bring that to your attention as well in this video. I'm not trying to do any type of short-term analysis right now. Maybe later I'll do maybe Ethereum and Cardano analysis on the daily. There's absolutely for sure some really good, insightful data to look at on those charts. But I wanted to keep this video as kind of just a macro video explaining where I am in the cycle, my thoughts right now, how I'm managing things, because this is just my opinion, everybody. This is me on my crypto journey. I am trying not to come out swinging too much as a crypto bull. I realize that in moments like this, it's frustrating. You don't want to just hear nonstop bullish content, but I hope I present it to you in a realistic way, unemotional way, just how I'm looking at these markets. Because I think it's really data-driven, at least the way that I'm seeing it. And again, I could be wrong, and we'll have to monitor, we'll have to see, right? But this is just some of the things I'm noting on these charts and wanted to share it with you. So let me know your thoughts in the comments below. If you're not a subscriber, please subscribe. Turn notifications on if you're not in our intelligence system. Go check out some of our risk models. We got a bunch back there. We've got the exit planner that is back there. We have Zero, our AI, which is back there. I was just brainstorming with Zero in terms of trying to spot the best accumulation areas on something like Cardano. And you can just do that. You can strategize based on your strategies you have set up back there. Zero is trained on that data, and you can kind of just brainstorm. So these are my thoughts today. I appreciate you cruising through. I will see you in the next video. God bless.